Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss. It's July 7th. Let's get started with the charts. As you can see here, we peaked out over the last couple business days, and we're floating at about $104.09 this morning. So we're looking at some support coming in below us at about $103.80 and $103.40 if things get a little awry in the markets. So all in all, bonds are still hanging in there pretty nicely, but you can kind of see we have kind of like dipped off of that upward strong trading channel. So keep in mind though, you can kind of see the charts going up right now. We are maintaining that upward trading channel. So the overall direction of bonds is still up. But if we continue to trade like we have over the last couple of days, we could break that upward trading channel and get into more of a flat trading channel, which will mean we're not going to more or less see better rates coming our way, but more just kind of some consistency, some flatness in the market. So above us, we're now looking at about a 104.20 resistance. As far as reports came out today, really not a lot of news, but the ADP jobs and the unemployment jobless claims came in better than expectations. Not really bond friendly, so that's why we saw a little bit of a sell-off today. The challenger job cuts actually did help bonds a little bit though. And so to kind of quantify where bonds are at, last month Freddie Mac, as seen down here, reported that the average interest rate was 3.6% at 0.6 points. That's what a consumer paid. Our average trading last month before last, I should say, in May was about 102.40. So given the fact that we're currently trading at 104.09, that's about $1.69 better. And to help quantify this for you as a consumer, that means if the average consumer was paying 0.6 points for a 3.6 rate, well, it's 109 basis points or $1.09 better, which means the result is you could probably get the same rate and actually get a credit back. A lender credit you can actually use to help pay for like your escrow, title fees, that kind of stuff. So anyway, bonds are again trading really well compared to the May averages, and hopefully Freddie will release the June averages here shortly so I can get this updated for you. But that is where you're at. Now here's your forecast. The analysts are coming in pretty inconsistent when it comes to the short term. One analyst who is generally a little bit more liberal is actually turning a little bearish and saying, hey, I think we're going to see some flattening. We could actually get up to 20 basis points worse. Where the other analyst, who is usually more conservative, is saying, no, I think we're going to continue to get better and better and better. So definitely some inconsistency on the short term, but we are seeing some pretty bullish consistency on the long term. So here's the thing. Bonds did meet my expectations from my last video on Tuesday. So I'm going to kind of revise it a little bit. I'm going to forecast trading to be between $103.80 and $104.25. What that really means is if you get a quote today, I think through next Tuesday, your quote shouldn't change by any more than 1/4 of a point to fee. So same rate, just a 1/4 point to fee variance in the coming few days. So as far as your 30-day lock considerations, if you want to play it safe, you may want to consider locking before the payroll numbers come out tomorrow. The payroll numbers could help us, but looking at what we saw with the jobs reports that came out today, there's potentially more chance that they could hurt us. So anyway, trying to play the statistics there for you guys. Anyway, that's it for now. I will shoot you a new video on Tuesday, and so love to hear from you guys. Don't be shy. Leave the comments down below. And if you're in the market to get a mortgage, perhaps refinance or buy a house, click subscribe. This will keep you updated on what's going on with the market and how the interest rates are going, or if they're getting better, if they're getting worse. And once you get your mortgage, you can always unsubscribe later on. And by the way, if none of this made sense to you, there's going to be a link here at the top right. And you can click this little guy scratching his head. That'll take you to Mortgage Bonds 101. And it'll teach you the fundamentals of how mortgage-backed securities and how they trade, how they impact you as a consumer. Anyway, that's it for now. We'll see you on Tuesday. Bye, guys.